What's up everyone, Dylan here. I wanted to hop on to do another video. I'm going to change it up this week. Today I'm going to post a near-term analysis, right? What I think the market's going to do near-term. And then tomorrow I'm going to put out another post going over more of a macro theme and something very, very important to look at for months ahead of time, okay? So in this video, I'm going to talk about my near-term analysis and what I think the market is setting up for, okay? So where are we? The bulls are in complete control, right? Both the S&P and the Nasdaq are at all-time highs, okay? So let's take a step back and figure out what happened to get to this point, okay? So there's been a near constant stream of negative headlines about tariffs, trade wars, debt, deficits, and geopolitics, right? Yet both indices have made new all-time highs. So let's go back to where we were last Sunday. So last Sunday, the S&P and the Nasdaq both opened up on gap downs, okay? So we'll go to a 30-minute chart, and you can see this was last Sunday, right? June 22nd. The S&P opened on Sunday down 61 handles, right about 1%, okay? Why was that? Okay, that was when the United States joined forces with Israel to do precision strikes on Iran nuclear facilities, right? Fordo and two others, okay? So a lot of people thought that with that escalation of geopolitics, right, that tensions, that the S&P was due for a move to the downside, okay? So when the S&P opened up down 1%, where did it go into, right? It went right into the 200-day moving average. So I'm going to go ahead and back this up. And as you can see on the daily chart, that's exactly where the S&P opened up on last Sunday, okay? Literally right there. And what happened was, again, a lot of people were leaning on the short side of things because, this was the first time in a while that U.S. was entering into a war. And what did people do? People were leaning on the bearish side of things, especially the fact that the S&P broke below the previous week's low, right? If I zoom out, you can see that was the previous week's low. S&P opened up, hit the 200-day moving average, and once it got back above previous week's low, it did not look back. In fact, every single subsequent day last week made a higher high and a higher low. So again, bulls were in complete control, and they still are now, right? There's not much of an argument against that, right? Now you could see the S&P futures and the Nasdaq futures close 5 consecutive days in a row, right? Starting last Sunday/Monday, right? 1, 2, 3, 4, 5, 6 green days in a row on both the S&P and the Nasdaq, okay? So that's where we are now, okay? So this is very, very important. Despite being at all-time highs on the S&P and the Nasdaq cash indices, right? We are at a point now where it looks to be a little bit overextended very, very near term. And the reason I say that is we're going to look at a 4-hour chart, right? 4-hour chart is pretty solid in terms of more of a bigger time frame picture, right? We're going to do the RSI on the 4-hour chart. As you can see, the RSI got well above 70, right? Well above 70 means that technically it is overbought, okay? So the RSI on the 4-hour chart got as high as 81.84. So we're going to go ahead and mark a line right around that 81.8 level. Okay, let's see. So we'll do 81.8, right? And I'm going to zoom back, right? I'm going to zoom out, and we're going to find the last time it got up to 81.8, okay? Right there, it got to 80.92. Right there, 81.4. The last time it surpassed 81.8 was all the way back here, back in July of 2024. You could see down below, right, when I hover over that, you'll see the line, right, the RSI number right there. So if I hover over that, you can see that number is 82.55 on July 11th. So it's been almost a year since the RSI has been that elevated, okay? So two things can happen for the RSI to reset itself, okay? One being the S&P or the Nasdaq or both can consolidate sideways, okay? By taking a breather and moving sideways, that can reset the RSI, setting up for another move to the upside. The other one is the fact that both can pull back, okay? So if the S&P and the Nasdaq consolidate sideways or pull back, that will set up for a more appealing move to the upside, okay? Because if they don't do any of those two, can it still move higher? Yes. However, it becomes much less appealing to chase these highs without having a pullback or the consolidation first. Okay, so you could see the last time the RSI was this high, what happened to the market? It pulled back around 75 handles or 1.27%. Then it went a little bit higher, right? It went up about 13 handles higher before pulling back 580 points. Now, will that happen again this time around where we have a nearly 10% drawdown from the near-term highs? Who knows? It could. Do I think it will? Not necessarily. I don't think so. But again, chasing highs up here is just not that appealing, okay? On the flip side, before the S&P and the Nasdaq broke highs, it was much more appealing, because the RSI was not in overbought territory. And there's a nice rule of thumb that I like to use. You could see last week I posted before NASDAQ hit that all-time highs, I said more times than not, when the major indices are this close to all-time highs, they end up taking them out, okay? To put that in a more quantifiable understanding, I said, right, this is a good rule of thumb to use throughout your journey as a trader. Many folks tend to have contrarian views near a major high and develop a clouded bias to try to counter the trend in short. Over the years, I've learned the hard way. When a major high was made more than 3 months ago, followed by a 10% or more drawdown, right? When that instrument comes back up within 0.5% of that high, it breaks above more times than not. So again, at that point, the S&P had not broken above the highs, right? You could see it was still below the all-time high. So I said, same thing, goes for the SPX, right? Will it follow in the NASDAQ's path and take out those highs, or will it reject at that resistance? From a pure probability standpoint, the former is more likely, but not guaranteed, of course, right? And what ended up happening was the former played out, where the SPX also took out those highs. So again, going back to those spots, it still was a higher quality, higher probability that the S&P and the Nasdaq would sustain value and keep going to the upside for the SPX to take out that high and then go higher. But now, again, because of that 4-hour RSI being above 81.5, right, and going all the way back to the last time it got up there, which was nearly a year ago, it doesn't look as favorable to continue to the upside without first having an area of consolidation or a pullback, okay? So that's something very, very important to look out for. On top of that, I'm going to look at MAGS, right? MAGS is the Roundhill Magnificent 7 ETF, right? It shows the MAG 7, which is comprised of, say, Apple, right? Let's see what they are. I think it shows it. Let's see. Okay, so it doesn't say exactly what it is, but the fund targets a narrow portfolio of 5 to 10 stocks publicly. So that'll include, right, Apple, Microsoft, Nvidia, Google, Amazon, Tesla, Meta, mega cap names like that, okay? So this is a very, very good thing to look at when you have such a strong market, right? Because chances are the MAGs are going to be leading that market, okay? So I give credit where credit's due. This was from KPAC82 on Twitter, Kevin Pack. And he posted this, and I thought it was worth sharing, right? So I used the wrong tool. So I'm going to go ahead and draw a channel, right? You could click those two lows, and then you bring it up top, right? And you could see that we're right up at that that previous, or that resistance channel relative to the slope of the support. Right, so it's just a channel trend, right? And on top of that, you could also see that there's a negative divergence where price has been making higher highs, higher lows, whereas the relative strength is declining. So what does that imply? That implies that as price goes higher, right, into a resistance area, when you see that the RSI, the relative strength, is declining, right, put those two factors together. Price moving up into a key resistance with lower strength, chances are, in terms of pure probabilities, it should reject there, okay? Is it guaranteed that it's going to reject there? No. But from a pure probability standpoint, it should. There is a higher probability that it will, okay? And if it does, in fact, fail there, where price starts to pull back, guess what will happen to the S&P and the Nasdaq? Chances are, if the magnificent 5 to 10 stocks, right, the top 5 to 10 mega cap names start to decline, the S&P and the Nasdaq will probably move down in tandem. Okay, so again, this is very, very near term. I believe that the S&P and the Nasdaq are setting up for either a consolidation sideways or a pullback. Okay, will it play out like it did last June, where the last time the RSI was above 81.5? We will see. But again, this is very, very near term. And then tomorrow I'm gonna do another video going over a very, very macro visual and a key piece of context to look out for going forward that is very, very, very influential. Okay, so that's it for me. If you guys liked it, give it a thumbs up, give some feedback. I always appreciate feedback and comments. So we will see how this shapes out, and I'll post another one tomorrow. Peace.